the markets definitely putting up a spirited show at this point in time, especially on a day when we have not got very good cues from Asia, barring China, where, of course, there is a CRR cut. And Wall Street as well letting you down a bit. Greek problems overhang for all global markets. For that kind of a performance, for that kind of a backdrop, you will have to say the Indian markets have shown reasonable resilience, and particularly heartening is the advanced declines numbers, which are still standing at 7 stocks in the green for 4 in the red. That's always a positive for the intraday bull. Let's turn to one area which has every reason to be bullish. The fall in crude prices has been positive for the HPCL, BPCL variety. A little different for ONGC, which of course has a double whammy when crude prices fall and the government doesn't quite promise how it will handle the future subsidy sharing. What we have heard is that there could be a bit of a dollar-based sharing, a crude price-based sharing of the burden, that if crude prices were to fall below $60, then ONGC and the upstream companies will be kept out of the subsidy math altogether. And if it were to be, above $60, then progressively their subsidy burden could increase. But at the moment, it looks like $50 is where crude might remain. So how will the earnings pan out for the moment? Sudhir Vasudeva, the former chairman and managing director of ONGC, joins us to tell us whether this kind of a formula will be good enough for a company like ONGC. Morning, Mr. Vasudeva. Thank you very much for joining us.
Good morning.
Well, first up, let us assume ONGC is going to be kept out of the subsidy burden, because at the moment, chances are that crude is going to stabilize at $50. What happens to earnings for ONGC?
See, the earnings of ONGC will be severely dented if the crude oil prices are $50. Actually, this year, till first half of the year, the crude oil prices were all right. So the first half earnings were not very bad. But this next 2 quarters would depend upon what is the subsidy burden going to be if the oil prices remain at $50.
So, I'm asking you this question because at the moment, if there is an offer for sale of ONGC shares, this is what investor is going to look at. That for the moment it's $50, maybe no subsidy. That is the best case the government can tell you. No subsidy burden under $60 and progressive burden at crude above $60. Will an investor bite at all?
See, first of all, in the beginning of the year, the subsidy burden was estimated to be around 1,20,000 crores. In the first half, the under recoveries were of the order of about 55,000 crores. Now, what is being projected is that the subsidy burden would be about 77,000 crores. So, if the subsidy burden is coming down by 50,000 crores, there is no reason for the government to be taking this subsidy from ONGC and Oil India and GAIL for this purpose. So, if the relief is given to ONGC and Oil India, then of course the share prices will look up. But I mean, it has to be added up with so many other things, and when the market is right, then only ONGC share should be divested.
So, Mr. Vasudev, if this new subsidy sharing formula is used, then how much do you think ONGC's net realizations could go up to?
See, I am not really aware. I mean, what I have heard, ONGC and Oil India had jointly proposed a formula that up to $65 there should not be any subsidy, and beyond 65 up to $100, 85% of the incremental revenue should be taken as subsidy, and beyond $100, 90%. Because the oil field services cost also go up in tandem with the crude oil prices. So take care of that, another 5%. So, I mean, I have no idea in terms of absolute numbers as to how this will help, but I mean, presently when the crude oil prices are less than $56, there is no point. I mean, there's no rationale of having a formula which says that ONGC and Oil India have to pay $56 per barrel towards production of crude oil.
Is there a risk that any kind of ad hocism may return at some point in this year itself if crude surges again?
Well, I would not be able to comment on that, but actually this is what has been worrying everyone, the producers as well as the market, the analysts, the investors, that the formula has never been consistent. Right from the time the subsidy was introduced in 2003-04, it has seen many avatars, and the latest one was this $56 a barrel. And we wanted a consistency. First of all, both ONGC and Oil India were producing predominantly from old fields, and since the cost of production was going up time and again, also the new projects were not becoming viable at less than $65. This is what was suggested by these two oil producing companies, that if we have given $65 per barrel, at least there will be some consistency in our outlook as to what the realization is going to be and how our funds will flow and how many projects can be cleared, etc.
You know, $50 quite clearly is the nadir of the crude cycle. I mean, the global economies are not going to be in deflation forever, and overproduction of shale gas is not going to be a reality forever. It is going to be a global growth story, probably in calendar 16 or probably in calendar 17. So how should an investor look at, if he is given a reasonable promise that ONGC will not have to bear a subsidy burden under 60 and over $60 it will be progressive? You think he will not bite? I mean, he will be in the money probably, after 2016 or 17 as well. Do you think he will be much better off if that cutoff number was not $60, but say $65?
Yes, certainly. I mean, everybody, the investors, etc., they look for certainty, and if this kind of uncertainty is removed, or the ad hocism is removed, I mean, they will definitely look at ONGC with renewed interest. Unfortunately, when any investor is looking into this kind of company or the shares, and they also see the history. I mean, right from 2003-4, this formula has been just continuing on ad hocism basis, and that is what has been worrying. I mean, every time we have gone to the market for disinvestment, etc., two things have bothered the investors very much. One was the gas price, which was later on revised, and second thing was this uncertainty on the subsidies. So I mean, the government of the day has to address this. And unfortunately today, because the crude oil prices are less, I mean, they are in a better position to address this issue more resolutely.
Okay, let me give you a blank check kind of question. Obviously, the government is not going to not touch ONGC's money if crude were at, 75, 80 or thereabouts. So, as an ONGC well-wisher, what would you like to hear?
Well, I mean, just to balance both the sides, I mean, I would still plead for, at least give $65 to ONGC so that the projects can be, taken forward. I mean, there are many projects which would be put on hold. I mean, both marginal field as well as IOR and EOR projects which are not viable at less than $65. And these will add a lot of value, because the marginal fields, if I remember correctly, I mean, we had indicated that about 13 million ton crude oil could be produced from this marginal field projects which are still under consideration. And they will save about 40,000 crore rupees for the government at then prevailing prices of $100 when we had written to ONGC way back in 2013. Similarly, this IOR and EOR projects, I mean, if they are not implemented, ONGC would tend to lose about 70 million ton of crude oil in next 10 years. And this amounted to about 2,25,000 crore rupees of savings for the country. I mean, if this much of crude oil need not be imported and was produced by ONGC, if at all ONGC was given $65. So that was the economics we gave, and that's why the government was very actively considering this, giving ONGC and Oil India $65 a barrel. And same thing is probably being reconsidered again.
Point taken, sir. I think that's a cast iron case for $65 as the cutoff. Thank you very much, Mr. Vasudeva, for joining in and explaining that to us.